Good afternoon, and thank you for joining us this afternoon. We're here at CCIA and Europe, co-hosting the launch of the European statistics prepared by Analysys Mason. Just for a point of clarity, this was not commissioned by either of our organizations, but we're distributing partners thereof. Encompass actually commissioned the study, and we're lucky enough to be joined by one of the authors of the study, David Abacassis from Analysys Mason, who will actually walk us through the key findings. And following the presentation of the paper, we will have a Q&A where we hope that there'll be lots of questions and a good debate. And then Christian Borgreen from CCIA will also be fielding some of the questions. So looking forward to it. David, please.
Thank you, Siada. Welcome, everybody. Good afternoon. Thank you for being with us. And thank you very much to CCIA and Europe for hosting this launch and being a distribution partner to this report. I'm going to try and share some slides. I would appreciate if you could just give me a sign when you can see it. Hopefully it will work. Fantastic. So I will run through the findings of the work that we've been doing over the last 3 or 4 months pretty quickly. There's a report which is pretty detailed and a few infographics that we will share. I think all that some of you will already have seen that go into more depth, and I look forward to your questions as well, and will do my best to answer them. So, as all of you are no doubt aware, there's been a big debate raging for the last few months in Europe, but that there are similar debates going on elsewhere with slightly different characteristics on whether the current settlement in terms of how traffic is delivered on the internet to internet service providers from online content and application providers should change. And the current situation is that these interconnection arrangements are primarily negotiated freely between parties. What Ethno, some large, primarily ex-incumbent vertically integrated operators have been arguing forcefully is that the status quo should change, and content and application providers, and in particular larger ones, should pay for data to be delivered to end users on these ISPs networks, and that the form of that new arrangement is something that we've been referring to as network usage fees. It's in the way it's been articulated by Ethno and others. It's very similar to telephony termination rates, which is something that I started my career looking at 20 years ago, and hope never to see again. But here we are. So the reports that we've been asked to do or to look at really looks at the 5 points that are on the bottom of this slide. As a starting point, we explain how the internet has been built and how that's been dependent on collaboration between parties, between ISPs, between what's called tier 1 carriers who carry internet traffic globally, and content and application providers, so that the overall cost of the system could be minimized even as data traffic increases rapidly, and so as to ensure that end users are getting the right quality of experience that they expect from online services. The second point in our study is to quantify the investment in infrastructure that content and application providers have made. This is an update of work that we've done in 2014 and in 2018, and we'll go through the results focusing on Europe today. But we've also, as part of this work, we've also tried to assess the claim that data traffic from content and application providers is a major driver of cost for ISPs. That's an important point and an important dimension of the communication and lobbying that Ethno has been doing, and clarify the link between traffic and cost. And that's something that we will also show you. I should say upfront that this link is not one way, in the sense that some of the investment that content and application providers are making in infrastructure actually enable ISPs to reduce their costs, and we'll see some interesting statistics there. And finally, we've looked at the potential impact of network usage fees proposals. We've got an initial view. We are proposing a framework in which to analyze it. And I think all of you who are interested in this space will have seen BEREC's first report coming out on, I think, last Friday. And there was a briefing yesterday on the merits of what Ethno and large ISPs are asking for. They've also indicated that they would be working on an impact assessment of potential changes to these interconnection relationships. And we hope that this could be a contribution towards that. Very high level findings. First of all, content and application providers are still investing a lot in infrastructure. Since 2011, the amount of money that they've spent on data centers, networks, and content delivery networks has exceeded 800 billion euros globally by our estimate. And in Europe, it's around 183 billion in our central estimate. At the same time, we've seen ISP costs remain broadly stable. So if we look at network costs and or network OPEX and capital expenditure for ISPs globally, we find a relatively stable picture. I think we'll see that in the next slide. At the same time as we see very fast increasing traffic. And what that means is that ISPs have been able to generate very strong economies of scale and carry much, much more traffic for the same amount of money invested and spent every year. Part of this is obviously down to technology, and part of it is also enabled by some of the investment that content and application providers are making to bring traffic close to ISP's own networks. And today, large content and application providers hand over traffic in every large city in Europe to ISPs who want to interconnect with them there. And they also provide caching infrastructure, and that allows data such as, for example, Netflix videos to be stored much closer to end users and to use fewer network resources. And we estimate that the cost saving of these measures is around 5 billion euros globally as of now on an annual basis. And in Europe, it's close to 1 billion euros a year. And finally, the calls that Ethno and others have made for network usage fees are focused a lot on ISPs costs and returns and very little on consumers and competition. And we think that there's a very important aspect there that regulators and policymakers need to take to heart, which is how any change to the way in which the internet works today, based on voluntary interconnection arrangements, would affect end users. So the internet is a network of network. You and I can access any content, any legitimate content on the internet from any ISP's network. And that works because there's a very large number of interconnection relationships between thousands and thousands of networks online. The vast majority of these relationships are informal. It was always the case. So in 2011, Packet Clearinghouse reports that only 0.5% of interconnection relationships were based on contracts. And now it's 0.002%, so a very, very, very small number. Of course, if there was regulation to codify payments from content providers to ISPs, all of this would need to be codified in contracts or interconnection offers, interconnection agreements, which would increase complexity and the cost of administering these relationships would go up. The point about the current way in which the internet works is that it's been extremely successful, and it's also provided incentives for content and application providers to invest more and more in infrastructure, starting from obviously their own facilities and data centers, bringing traffic through submarine cables and terrestrial fibers to multiple cities in Europe and globally, and then interconnecting in those locations very close to where ISPs are already present or can expand easily. And finally, with the advent of content delivery networks, making more and more content available through caching directly within ISPs networks, where these ISPs choose to go into partnership with those content providers. If network usage fees were introduced, it's clear that there would be a disruption to the incentive of stakeholders, because content and application providers would have to pay ISPs, and this build or buy incentive would come into play, and that might reduce these investments and overall drive efficiency and quality down. That's our view at this point. So in terms of what this investment looks like, so investment in data centers for storage and computing, investment in transport networks, so long-distance submarine cables, terrestrial links. That's very often in partnership with telecoms operators, either investment partnerships or buying long leases on cables. And finally, content delivery networks. And these content delivery networks take the form of routers where traffic is exchanged, sometimes in internet exchange points and caches. Overall, as I've mentioned, we've estimated that the overall investment in this infrastructure by content and application providers in Europe reached 183 billion euros in the last 10, 11 years. Over the last period that we've looked at, which is 2018 to 2021, we've estimated average annual investment at around 22 billion euros, and that's 35% higher than in the previous period we looked at, which was 2014 to 2017. So these investments are continuing apace. There's quite a bit of evidence that this is having a lot of spillover effect on economies, and it's allowing all of us to access the services that we want online, and all companies to use cloud services. And this is an important pillar of the digital decades policy that the Commission is pursuing. As I've mentioned, some of these investments are also resulting in cost efficiencies for ISPs. So if you can cache content within your network as an ISP, you don't need to use the entirety of your network. You can use only part of it. And we estimate that at the European level, that leads to around €1 billion of savings annually at present, at current traffic levels. Importantly, ISPs, although they are carrying massively increasing amounts of data, and you can see here that in the last 4 years, global traffic increased by 162%, so nearly tripled. The total costs of networks that ISPs are incurring have remained remarkably stable. And there's a small growth there. It's unequally distributed between different networks. But there clearly isn't a linear relationship between traffic and cost. And if anything, costs are very stable. That's linked to equipment costs falling over time. That's also linked to economies of scale. So the more data traffic a network carries, the cheaper it is for it to carry an additional bit of traffic. And we can see this over time on this chart. I think it's also important to remember that the transition to gigabit-capable networks that we're in the midst of in Europe is also going to result in cost efficiency. So fiber-based networks in particular can be much more cost-effective than copper-based networks in the future. So in addition to these cost benefits, there are many other contexts in which ISPs and content and application providers are partnering, and you have to take the view that these partnerships are beneficial to both parties. I saw today that Deutsche Telekom or T-Mobile and Google Cloud signed a big partnership agreement. Both of these companies seem very happy with that. What we've seen more prosaically at a consumer level is based on consumer research that we've done in multiple countries in Europe, is that there's a clear correlation between what you want to do with the internet and how much you're willing to pay for connectivity. And that's visible in the data that we have. And ultimately, I think that also helps us focus on why we're investing in gigabit-capable broadband networks. It's not so that we can have a nice fiber cable going into our kitchen or living room or hallway. It really is for the services that we expect to use with a high quality of experience online. And so these partnerships, these coordinated incentives are really an intrinsic part of the success of the internet, both in the past and in the future. Now, what should policymakers look at and be mindful of? So we think that a move from negotiated interconnections to network usage fees risks having harmful impacts on a number of angles: reduced quality of experience for online services, less innovation from new online service providers, because we really think that small content and application providers would be equally taken into that change. potentially poorer quality of experience for broadband users, more limited choice and less competition in ISP markets, and ultimately higher prices. That's for regulators to look at in more details. We have a contribution to this analysis in our report. We think that it's in any event important to ensure that whatever the regulatory intervention is, and BEREC recognized that very well, it needs to be appropriate to the nature of an identified market failure and proportionate to that market failure. We don't see a market failure today. BEREC doesn't see a market failure today. That whatever decisions are made to regulate should be consistent with the principles of net neutrality, which are extremely important to the continued success of the internet, and also avoid unintended consequences and further market failures. We've seen, I talked about call termination before. That's something that has had to be regulated for the last 20 years and creates quite a big burden of regulatory oversight for operators and regulators. So all of these things need to be taken into account. A few points here, which I won't go into details around what needs to be looked at. I mean, clearly, and I think others have made this point as well in the last few weeks, it seems a bit of a fallacy to argue that content and application providers are sending traffic to ISPs. BEREC makes this point very well in its recent publication. It is end users who are requesting this traffic, this content. And if gigabit networks are going to be a success and are going to be, in fact, a generator of positive returns for the many investors that are investing in fiber networks today, we'll need attractive services, and these services will have to be provided by a whole ecosystem of players, not just by ISPs themselves, who I'm sure would like to sell pay TV to us, but it's probably not what we want to buy on our internet connections. So I'll leave you with this here. Apologies, I probably overrun by a few minutes. And we look forward to questions, I think.
Thank you so much, David. Christian?
Yeah, happy to offer a few quick observations, and then we can go to the Q&A with the reporters on the call here. But yeah, thank you so much, David, for this contribution, this new evidence to the discussion. I think it's very clear that tech companies indeed are investing, and they're increasingly investing in Europe's internet infrastructure. I think you mentioned 22 billion euros annually, and that this is leading to major savings for telcos, and nearly 1 billion euros annually. And also, what I found interesting is that your paper is showing that EU telecom operators are perfectly able to handle the steady traffic growth at a minimal incremental cost. This is not exactly what they're telling the lawmakers here in Brussels, obviously. And then thank you for making the link to this week's BEREC paper, the very important first paper from the European telecom regulators that I think everybody read with great interest, that also confirms what you're finding here, right? That EU regulators found that there is no evidence of any free riding along the value chain, that there's no evidence justifying the telco's proposal, and that indeed their proposal could be of significant harm to the European internet ecosystem. So thanks for raising this. I want to say, maybe as the final point, that this traffic growth, and David made this point, and BEREC is making this point as well, it's coming from the telco's own customers. They're the ones demanding data, right? And tech companies just responding to that. They're helping telcos by bringing data closer to the end consumers, but the demand is from the telco's own customers, and they have already paid for this transfer. What the telcos are asking for is to be paid twice at both ends of the cable that they control, and frankly, their customers have already paid for that service. If you were to introduce, as the telcos are advocating for, if you were to introduce and network usage fee, well, that would probably mean that there'll be an extra cost, and of course that cost tends to find its way to the end customers, meaning that European customers, be that public institutions, SMEs, companies, etc., would have to pay more for their cloud solutions, and of course end users would have to pay more for their streaming services.
And I think actually what we're seeing is a tipping point in the whole debate, where we're going from emotive claims to actual facts and figures. And David, your paper is, I think, going to contribute quite a bit towards the reality of the situation, and analysing the reality of the situation, as has the BEREC preliminary findings, very much echoing what David said, leading into the impact assessment, which we expect will be early next year. But I think it's time to maybe hear from the journalists in terms of questions potentially on our questions and answers. Christoph, would you maybe introduce yourself and please go ahead with your question?
Sure, thank you for the question. This is Christoph Herbert. I'm with Handelsblatt, the German business newspaper. What do you think, why is this discussion coming up now? Was there any event that sparked this discussion? And what do you think, what are your chances that you can stop this whole thing? Because it seems like in the Commission, Vestager and Breton are very much on the same side. Do you have any parties in the parliament, for example, that are as critical as you are? Thank you.
Okay.
I'm happy to kick off there, and I don't know if David, you have any observations, but look, this is not the first time that the largest European incumbent telcos have pushed for this campaign. They did it 10 years ago, they've done it before, asking to be paid twice through a sort of sending party pay device. It has been dismissed before, like 10 years ago when they last did it in 2012, everybody was against it. I mean, what BEREC's saying now is very similar to what they said 10 years ago, the Commission as well. Everybody was against it. Now they're hoping that people will have forgotten it and have come up with I mean, I have to give them credit. They come up with a very nice story, but it's just a story. There is no evidence. BEREC, the EU regulators, have been looking at this, right? After 1 year campaigning from telcos, there is zero evidence justifying what they're asking for. And I think it's too early to conclude where the Commission is and where the Commission is on. This is just a debate. It's just a lobby campaign. We are still to see any confirmation whether there will be a public consultation, for instance. I mean, presumably that would be sort of, at the most, as far as the Commission will be willing to go, would be a public consultation to look further into this. But the regulators have been very clear, there is no justification. And maybe just finally, it's been 1 year that the biggest telcos have been pushing for this. And frankly, the only sort of supporters in the stakeholder community has been among themselves. I mean, it's still just these 14 or so largest telcos in favor. If you look at all the experts that have come out from the consumer groups at BEREC, from different parts of the internet ecosystem, have come out extremely critical. And again, this week, BEREC came out and gave the thumbs down. Frankly, I think we might be at a tipping point in this debate, but I mean, there's not much support and momentum behind the telcos campaigns.
Thank you. I think we have a question both from Nick Wallace and from Ganel Pepin. Maybe we can go with Ganel for a second, and then Nick, following Ganel's question, maybe we can field that one. Ganel? Ganel, you need to unmute yourself to be able to speak. I'm afraid we can't hear you. Thank you.
Go to Nick first.
Yeah,
see if it works.
Indeed. Nick, would you like to try to go ahead then, please?
Yes, a question for David. At the very start, Ciara said that this report was not commissioned by CCIA or by .Europe. So what was the genesis of it? Where did it come from?
It was commissioned by Encompass, and the findings were shared with us as it was being developed. And we thought that it would contribute to, as there is a focus on Europe, that's exactly the part that is of relevance to .Europe and also to CCIA, and that's why we agreed to be distributing partners of that element that would contribute to the debate here at EU level.
just to Nick, just to answer your question, so Encompass is not an organization that's active directly in Europe. It's active primarily in the US. It used to be called Comtel. It's an organization, trade organization that's been around for a while, and they're pretty unique because they represent both tech companies, but also competitive ISPs and fiber builders in the US. So they have sort of both sort of constituencies there. And as you know, and I mean, perhaps just to also make the link with Christoph's question earlier, I mean, the context, I think the reason why this is coming up now is partly the European context with the adoption of the DSA and DMA, which provide, I guess, a legislative hook to treat different companies differently, potentially. We don't think that if this went ahead, it would be limited to large content and application providers. Everybody will, every content application provider would fall under it. We can discuss that if this is of interest. But I think that's part of it. And the sense that there's a propitious political climate is probably largely behind that. In the international context, as you probably all know, that there are two kind of related developments elsewhere. There's a review of the universal service funding in the US, which prompted some of the initial discussions with Encompass. And there's a set of court cases in Korea, Korea being the only country that's currently regulated or currently regulating the delivery of traffic to ISPs networks. So, there's a global context there that I think has led to these discussions being reopened now.
Thank you, David, for that as well. And in the meantime, we've gotten Gane's question. I don't know if it's open to everybody, but otherwise I'll read it out. Telcos say there's been a more than 50% increase in peak traffic with COVID, and that we need to be forward-looking with an exponential increase in traffic, that subscriber revenues won't be able to cover that. What do you answer to this? So, David, I'm going to hand it over to you first. I don't know, Christian, if you want to add to that as well.
Yeah, I mean, I think it's not exponential; it's more geometric. But there has been a sustained increase in traffic. What we're seeing is that these traffic increases are not exactly the same everywhere. So, on the basis of data that you can find in Ethno's State of Digital report, for which my research colleagues are actually providing data. You can see that some countries have much higher traffic. Some networks are carrying much higher traffic than others. I think I'm French, but I live in the UK. At the moment, the UK average data consumption per fixed connection is around twice the European average, and costs haven't spun out of control at all. There's a lot of scope for efficiencies in networks. The potential area of the network that's traffic dependent for fixed networks, I'm talking about. For mobile, we can go back to that if that's of interest to you. But for fixed networks, which currently carry 90 to 95% of traffic in Europe, the traffic dependent part of the network is what's called the core network. So it's not the access network in which most of the investment today is going to upgrade access networks to fiber. It's the core networks that have been invested into and upgraded and modernized over the last 20 years. The economics of those core networks are extremely beneficial to larger amounts of traffic. To give you a sense, if you want to multiply the capacity of a core network link by 10 today, say from 10 gigabit per second to 100 gigabit per second on a given link, you only have to pay around twice as much as you have as you do for the lower capacity. So, the unit economics at the margin for those networks are extremely beneficial to large scale. So this goes hand in hand, and you can see that based on the last sort of 5 years or so, which is what I showed on the slide. Very stable cost basis overall for rapidly increasing traffic. So I'm afraid we have to say that the at least on the cost side, it's very unlikely that that whatever we can see for the next 5 to 6 years at least will be in any way driving costs.
That's very helpful. Did you have anything to add?
Maybe just on the point about the claims from telcos that we are experiencing an exponential data growth. And I agree with David, it is not exponential. Exponential means it's sort of going through the roof. What David's studies find, and it's not the only one, there's also evidence from the German regulator. They did a study, or had a study done by WIC. Also, they talk about a steady growth in traffic. And frankly, the telcos have seen this since the 90s. This has been going on for decades. And what Analysys Mason study find is that it is actually getting cheaper per data unit to do this investment. So actually, telcos investments remain pretty steady. There's a tiny increase every year, but they can certainly cope with the ongoing steady increase in data growth.
Again, and I hope your question is answered sufficiently. And I think David is following up in the chat as well with some further evidence points there. Just to add, mobile networks exhibit somewhat different sensitivity to traffic, which you discuss in the paper. Thanks, David.
I think the point here is that many telcos have been investing in fiber since the 90s. Everybody has known that this is sort of a future. They have to make these investments at some point. If you invest in fiber, it makes no sense. I mean, it makes no difference if people watch a YouTube video. There's no incremental cost, right? You have made this once in a 2 generations investment. If it's a mobile network, well, there is an incremental cost. It's not a large one, but there is an increased cost when people start using more data. But frankly, their telcos' own customers tend to pay different packages. So the more they consume, the more the telcos will be paid. So they should be able to recover the costs for that as well.
Yeah. Were there any further questions?
There was a point on, South Korea, but
yeah, that's exactly the one that I was going to pick up on. But Gennett, did you still have another question?
Yes. Do you hear me now? Yeah. Sorry for earlier. I just wanted to ask you about mobile networks and what some telcos say that it's not so much the fiber or the antennas. The problem is but the active equipment in core networks and near the antennas to cope with the increasing traffic. That's the problem. And the French telcos federation say that they can say that the big 5 platforms are responsible for 500 million euros of increased cost for them on the fixed network per year and 1.5 billion per year on on their mobile networks. Do you have again an answer to that? What do you think of it?
Yeah. So there's a few things to unpick. I think on mobile networks, just to explain. So the big difference between a fixed network and a mobile network is that the connection to your device, from your device to the network, which is from your mobile phone to the masts that you're connected to, is a shared connection with all the other mobile users that are connected to the same network at the same time in the same place. So there's a degree of resource sharing there, and the stuff that really limits how many users you can have is the amount of spectrum you're deploying in the sites that you're connected to, the amount of radio spectrum, the resource that, I don't know how much all of you are sort of familiar with this, but it's frequencies, right, that are assigned by regulators to operators. And then the density of sites, right? So if you think of a rural area, you're going to have one site every 5 kilometers, for example, right? If you think of a major train station in a big city, you're going to get a large number of much smaller, lower powered sites in the station itself, right? And that helps multiply the capacity that you can have with the same amount of spectrum. So of course there are some constraints there, but I think what we observe is a few things. First, the density of sites that operators are deploying, although it's going up, it's not going up definitely not geometrically or exponentially or it's going up relatively slowly. And a lot of the investment is being made by infrastructure providers now. So as you know, a lot of operators have effectively monetized that infrastructure by selling a large stake in it to investment funds, and they're the ones who are building on behalf of operators, right? So I think that's important to also keep in mind. But there are physical constraints. So with a given amount of spectrum, you can't densify networks more than to a certain level. And we spoke to a French operator a couple of years ago, for example, who was saying that in a place like Gare Saint-Lazare in Paris, which was the biggest traffic hotspot that was pre-COVID, but major traffic hotspot that they had to manage, they just couldn't increase the density of sites anymore. So there are physical constraints there that limit even if they wanted to spend all this money, they just couldn't do it physically. The way in which this translates into the way in which consumers consume mobile data is that still today, the vast majority of traffic that you consume on your mobile device is handled by Wi-Fi connected to a fiber connection, not on cellular. And cellular operators or cellular networks cellular connections tend to be priced in a way that helps manage the amount of traffic that end users are using. So there are some countries where there's nearly unlimited data plans. These are countries where there tend to be a lot of less dense areas, right? So where most of the mobile infrastructure is not congested, right? So if you think about Nordic countries, the US also has very large mobile packages and so on. And in countries which are denser and where it's harder to expand mobile networks locally within a congested area, you have smaller packages, and consumers react to this. So, and I think that's also what I want to sort of get back to, is that I think there's a rhetoric, or there's a way of explaining this phenomenon as, content and application providers are flooding networks with all this data, right? As we discussed, it's not really the case. It's about consumers asking for this data, and they respond to their own incentives in terms of the speed of their connections they get, the size of the packages that they buy, and so on. And the other thing is also, just to get back to perhaps my penultimate slide, you listen to some of the arguments, and I'm just going to caricature it just for emphasis here, but it's nearly as if we're saying that the best situation for a network would be to be empty. I mean, it's a bit like building an autobahn and saying, well, nobody can go on it because we're going to have to maintain the surface. I think we sort of need to take this into account as well. And I think actually, from a strategic perspective, telecom operators have moved from being vertically integrated service providers to increasingly connectivity providers, right? And as we can see, they've struggled to find innovative services that they can take the lead on, and I think that's true, despite investing quite a lot of money in some of this stuff, right? My suspicion is that they would quite like to go back to a regime where, if you want to get streaming video, you have to get it from your cable operator or your ISP, and you can't easily get it from Netflix or Disney or Amazon Prime. So
maybe if I may, to the original question about who generates this data, right? The telcos keep saying that it's a few companies or a handful of companies that are generating data, which is silly. It's a nice framing, but it's just wrong. It's a misunderstanding of how the internet works. This is how telephony works, right? Where you're sending an SMS, right? You pay the telco for sending it. That's not how the internet works. It is the end customer that is requesting data. And BEREC, the European regulators, was very clear in the report. And I'm quoting them: the demand from ISPs customers for content drives demand for broadband access. And it is the end customers, the telcos and customers, that are demanding this data. My parents in Denmark, they would never receive random content if they hadn't requested that from Netflix or data from Wikipedia, the website, or from Spotify. It's the telco's own customers that are generating this data, and it is a good thing for telcos.
If I may, I think being conscious of time, if there aren't any other questions, I think one point that we should definitely try to still cover is the glaring example that we already have, South Korea, and the lessons that can be learned there. Oh, sorry, there is another question from Christoph. I hope we can loop back to that because I think there's a lot to learn there. But Christoph, please go ahead.
I did not want to interrupt you. So.
Absolutely fine. I saw your answer. It's more important to get your question.
Sorry. Just one short question because I'm not sure if I understood it correctly. Christian, you said something about discrimination against large companies. So is that the proposal that is on the table? At least there's not a real proposal yet, but is that what is discussed at the moment, that it's just the large content providers that should pay their fees?
Indeed, there is a lobby campaign. It's been going on for a year. There's no proposal on the table. Maybe there is somewhere under the table, I don't know, within the European Commission. Clearly, if you believe in net neutrality principles, then the very idea of treating the data from some parties or some data differently than others would be in clear conflict with the neutrality principles, and everybody, including the telcos, are claiming to be supporters, which is
and Christoph, to that point, that is actually a slight U-turn that the telcos themselves did in their advocacy. They started out by saying everybody would have to pay, and when they got pushback on what the implications of that would be, the focus went to the largest players. But that is part of the lobbying campaign. That is definitely nowhere in a current proposal. Just to clarify, it's kind of a U-turn that the telcos have made as part of their lobbying campaign.
Right.
Which is silly, right? Because all European, many companies in Europe and government institutions are using cloud services, often by cloud providers. So if you add an additional cost because telcos want to be paid twice, somehow that cost will trickle down to the end consumers, meaning that Europeans will end up paying it anyway. European companies, European institutions would indirectly have to pay this internet traffic tax or whatever it would be. And European streamers, be that Spotify or Netflix or whatever, would likely have to pay more for their subscriptions through a sort of a streaming fee, right?
Volker, so thanks for your patience. Sorry to keep you waiting.
No problem. Thank you. I'm Volker Bricklip for German technology outlet Heise Online, and I've been hearing these requests from telcos for 10 years now, and they have been mostly ignored by previous commissions. What do you think has changed in Brussels that this European Commission that we have now seems to have an open ear for that, and this is gaining some traction?
Need we spell it out? But Christian, why don't you go first?
I think Volker is well aware of the political leadership managing this file and their professional background, and I'm not going to say more than that. There's no, as Barrett says, as Analysys Mason, there's no evidence of any change in the marketplace, in the ecosystem, right? Maybe there's a political change.
There's no fundamental grounding to substantiate it.
I think South Korea came up a few times, so maybe we can just touch on that, because clearly the law changes we've seen in South Korea since 2016 is, of course, a source of inspiration for the European telcos and for their campaign here. Yet, it is surprising in a way that they haven't brought it up. I mean, South Korea is the only country in the history of the internet that have brought up this sending party pay mechanism. And I think the reason why the telcos haven't brought it up in advocacy is because it has been a failure. There was a recent study made for the German telecom regulator that found that indeed it has led to higher costs, it leads to more delays or latency for end users. It has been led to a violation of net neutrality. transit prices are many times higher in Seoul than in Europe, and it's actually led to lower network infrastructure investments. So, I mean, the only evidence of a country that has done what the telcos are asking for, that evidence is pointing towards a failed experiment. And hopefully this is something that European lawmakers will keep in mind.
And for some of the smaller service providers actually pulling out of the South Korean market. So really bad experience there. That's why I guess it's not drawn on.
Indeed.
Are there any other further questions that anybody would like to raise?
In the chat, maybe?
Anything in the chat?
Nope.
No? Okay. Then I hope that you found this useful. David, thanks ever so much, first of all, for your and your colleagues' work on the paper, giving us these data points, and for being here with us to actually present them directly. And thank you all for being here.
Thank you.
Thank you. Bye-bye.
Bye-bye.
Bye.